What's up? What's good? What's happening? Hope you guys are good. I hope you guys are excellent. So today we're doing basically I'm gonna involving you guys into my workflow in terms of my day trading and how I go about it. So I'm just gonna get into in the middle of it and walk you through. Hope you guys do like and follow and subscribe for more content if this is the type of content that you'd like to see. So, however, without a waste of time, let's just jump right into it. Yeah, so basically, when I start everything with my analysis, I'm always on a daily time frame to view my screen like on a bigger scale. So so basically, guys, here what I do basically is that I would look for certain particular areas of structure on a daily time frame. But however, before I get into it, don't be confused by me just jumping into certain areas of structure immediately before I could like if I overlook certain things is because of I do most of my homeworks on weekends. Like today's day, it's like it's Friday, it's the end of the week, so most of my weekly outlook I would have done it on particularly typically I would have done it on a Sunday. So so please bear with me if I skip certain aspects or certain parts. So however, like today it's Friday. On a daily time frame, what I look for is I look at the daily candlesticks. They are very important to me, and they give a particular important insight as opposed to just looking at structure alone on this time frame. So today's day, it's like this is the current trading day. This was yesterday, which is going to be Thursday and Wednesday, Tuesday, and Monday. So Monday, gold was trading at 1760. Currently, price is at 1792. So it's up up significantly by a number of pips. So it's up roughly around about 300 pips. So which is a good trading week basically. I'd regard such days as good trading weeks because of especially when it comes to gold. It hardly, when it moves, we all know that. But then when it doesn't move, the consolidating period tends to take time most of the time. So so this was a good trading week. So this is where we started trading this week, and then Tuesday it was a little bit tricky, but then however it was also a good trading day. We had a couple of losses. Actually, we broke even on Tuesday. Wednesday also it was a good trading day, but then I was not much involved on Wednesday. Also yesterday, which was Thursday, because my focus was deeply focused on Nasdaq on Thursday. So today's Friday, we're just gonna this is the last trading day of the week. So hopefully we make some pips. Hopefully we get some you know gems out of this content also. So so yeah. So now because of we have today, which is Friday, typically what I do on today's day, I would basically label my candlesticks. The reason I do that is because the reason I do that it is because please pardon me. The reason I label yesterday's, I typically label previous days highs and lows, which is important to me. I do that. I label yesterday's lows, actually highs, pardon me, and also yesterday's lows. So the importance and the reason that I do that is because of, previous day trading session tends to give, clues or leaves a footprint for today's trading session. So So that's why it's important for me to be noting those levels. So this is today's current price action. As you can see, it's above yesterday's highs. Currently, we're trading above yesterday's highs, and it's still early in the morning. It's like 10 a.m. where I am GMT +2. So I'm in South Africa. So I don't know what time would it be in your country. If you know, let me know in the comment section if what time would it be if it's 10 a.m. GMT. What time would it be on your side? So currently we're trading above yesterday's highs. So we broke, yesterday's levels, which was key for us as day traders. And we are currently approaching key, you know, significant area of resistance, which is a supply zone of some sort. As you could see here, we had an evening star, candlestick formation happening right over here, which gives us a clue that this could be a reversal zone in the near future, which is apparent, uh, which is now basically. So if you're gonna be going down here, possibly we would be targeting either of the underlying levels. So we would be targeting this intermediate term low, or this low right over here within the consolidation, because of I was looking, on my weekly analysis overall on my swing positions. I was hoping that price would come to this level, but then Tuesday, Monday and Tuesday gave us pretty much a bullish signal that price would continue to go up really. So with that, i'm gonna I'm gonna jump to a lower time frame I have now that I have I've done my homework on a on a daily scale. So we're gonna jump right into I'm looking to change the time frame here, but however seems like it's gonna be troubling me. Oh yeah, that's what I'm looking for. Yep, thank you. We have that. So I'm gonna be jumping to a 4 hour time frame from this point. On a 4 hour scale, we're still pretty much looking at the same, you know, information. We're still looking at the same information. We had approached this zone, so this was a buying opportunity right over here. The reason why that was a buying opportunity because of if we would pull our Fibonacci here, if we would insert our Fib retracement tool, we saw that price rallied from these lows to those highs and came back into our 89% kill zone within our Fibonacci. So this also was a no-brainer basically to be taking this trade. So the second opportunity came through right over here at this high, excuse me, at this low, at this higher low. In fact, and the third opportunity came again at this higher low. I think this was around Wednesday or Thursday. Yeah, this was around yesterday actually, which was Thursday. And price rallied, and currently it's still in the rally after having caught this opportunity right over here. And now we are also looking for opportunities to go short after price dropped and price priced itself. So institutional traders repriced price right over here to these levels. So we also want to see our 89% golden level being hit here. I think that will do justice to us so that we could see price going further down to the downside. So that's just that for now. If we can just also skip to another time frame, which is the 1 hour time frame, which is my favorite time frame. The reason it is my favorite time frame, pretty much it's not that deep actually. It's because of, structure becomes clearer at these time frames. So here's what we have here. We have an order block right over here going on. We have a zone that we're looking to sell in, as we saw that price broke market. We had a high, then we had a little bit of liquidity injection to the upside, so which was typically of a stop hunt, price action going on over there, and then price dipped in basically to our lows, to our key entry level, and then price rallied. Excuse my voice, guys. Also, it's because of I have a little bit of flu going on there. So yeah. So we had that, and also price after making a stop hunt to the upside, price dipped in. Then we had a little bit of support forming over here to show that the drop was exhausted. Then we had a little bit of liquidation here. Then price started rallying to the upside. We came back to the zone and broke above the break of market structure, and price is still trading above. And for now, we are looking for price to drop to the downside. So, however, also guys, I just want to bring it to your attention that this is the classical BMS uh, uh, stop hunt and point of interest formation. So if you don't know what that is, I think you might need to look it up on the internet. It's everywhere. There are guys talking about it, and people are just going crazy about it, especially day traders within the advanced trading space. So that's the type of information that you need to be looking for. So guys, we're gonna drill down to our lower time frame now that we did our homework there. We're gonna get into our 15 minutes time frame. So this is just the typical day traders, um how should I call it, uh golden, time frame, basically, to put it like that. So this is where the magic actually happens. So the 15-minute time frame, it's just I'm not gonna get much into it as to what is it that I look for when I get it to this time frame. But then this is the time frame that I use, or typically as day traders would look, at for execution. So this is the time frame that we use for execution. So basically, to sum it up, the characteristics that I'd be looking for is session behaviors. As I said at the beginning of the video, that previous trading sessions provide a footprint or a clue for the next trading session as to what must actually happen, or what's most likely to happen. So in this case, looking at today's session, we are in the London Open. It's 10:30. It should be 9:30 in London. The London stock market is open. London traders are ready to come into the game. They're also looking at the same structure if they're looking for day traders who are looking to trade gold. So basically, yeah, that's what we are all looking at. It's just a question of liquidation and manipulation. So if you know how institutional traders go about trading, their trading style, you would understand actually what to look for. So right at this time in point, prices above yesterday's highs, prices above Asian session highs. Price is currently trading at its highest peak, and possibly, if we are going short, we could be having a high of the day happening, which is where we want to find ourselves involved. as day traders, so that by the end of the day, when price dips into the lows, it should be that we have caught the highest highs of the session, and we are looking to go down with price and let price run, executing properly, using proper risk management. So I don't want to keep this video long. I just want to keep it for like uh, you know 15 minutes, or at least 20 minutes at max, but then I don't want to max it out so that I don't want to bore you guys. So basically, I'd be looking for execution opportunities right in this zone. This is where I want to find myself being involved. I want to sell at the highest high. I want to sell at the premium, so that I can make, I can have a better risk reward, as opposed to instantly selling without taking certain levels into consideration. Because of when you're day trading, guys, you don't want to be compulsive. You might be tempted to be compulsive, and that's not what we are looking for. So guys, that's the zone that I'm looking to sell in. Possibly there are many other aspects that I've left out in this video that I didn't even speak about, and I'm going to continue making a further analysis. Actually, I'll make a detailed, graphical, annotation of my charts, and I'm going to post it on my Telegram. If you are not in our Telegram, it should be down in the description below. Make sure you click on the link, join the community, and also engage with us if you want to learn further. Remember, education is free. Fees must fall. This is trading, guys. You shouldn't be paying a penny for you guys to be learning these things. These things are all over the internet. You just need a mentor to select specific content for you guys, so that you don't be all over the internet seeking information and also paying exuberant amounts for some education that's not well structured, and that might, drag your learning process further. So Ish, I'm getting preachy here, so forgive me about that. However, yeah, that's what I'm looking for. I'm just gonna be shorting at this area. If price doesn't reach this level, uh you know I might call it a day for me. So my day might end sooner than I expect, because of this is trading. This is unpredictable. This is just a game of probabilities. So if you're gonna be taking this trade with me, good luck, good trading. Please, please, please apply proper risk management. If you don't know anything about risk management, contact me. Let's have a Zoom meeting. Let's engage about the topic. Let me give you a little bit of information that I have, and hopefully it would work for you, and so that I can just shed some light for you based on my experience, and how I use proper risk management every time, so that I never want to blow an account. So gone are those days. We don't want to find ourselves blowing accounts, guys. Sibatala. So to my South African traders, I say that sibatala to be blowing accounts now. So we want to preserve capital so that we can trade the next day, because of the next day might provide a better opportunities, opportunity, in fact, for us. So yeah, with that said, good luck, good trading. Like and subscribe, join the community, share with your fellow, trading friends and or associates, if you find this content valuable in any way. And if you like further breakdown, we can just make a one-on-one, and we can talk about it. Tango.